Today was quite a violently positive day for the markets, with the S&P 500 and Nasdaq up well above 1%. And I find this highly questionable, of course. We're now up almost 4% for the quarter. If you were to annualize that, that would be up almost 16% for the year. And 16% is well above the average S&P 500 return. The average S&P 500 return is roughly 7%. So we're at a current pace of more than double that. The QQQ is up nearly 20% year to date for the quarter so far. And I don't even want to go there because it's obviously incredibly unrealistic. So in one quarter, we're already approaching almost the average return for the S&P 500 for an entire year. And for the Qs, the NASDAQ, etc., we're already deep into double-digit territory. Now, is this an average year? Well, an average year is solid economic growth, no inflation, no world war, stable yields, and no quantitative tightening. Unfortunately, right now, we have declining earnings in many stocks, S&P 500 overall, declining earnings. We have higher yields above the long-term average yield of where the Fed wants to be and where it's been over the last decade, well above that level. We have a Fed deleting money, putting cash paper into the shredder and shredding that money. We have war going on. There's a bunch of reasons why this does not deserve to get an average return and why it should be well below an average return. However, multiples are still quite high, particularly for the most expensive stocks, of which are experiencing average declines in earnings. They are declining in earnings. So as far as I'm aware, the fundamental aspects are in place, just looking at the past data to justify a market pullback. However, when we look forward, the data gets worse. The Fed continues to say that they expect more rate hikes. Powell, as recently as today, said the SEP, Statement of Economic Projections, anticipates another hike. And let's not forget, this is an upward movement from the previous SEP we got just in December when we had inflation coming down. We have now seen inflation coming up, and all signs point to a hotter PCE or a hot PCE on Friday. So seems like the job is not done. Seems like the Fed is going to continue to be hawkish, but nonetheless, they say the full effects of the tightening done thus far are yet to be felt. So we're already having declining earnings. They're expecting additional declining earnings. They're expecting additional bank failures. They don't really care about the bank failures that have occurred thus far. That is their indication. That should be clear to people based on the rate hike they did last week. And yet, the continued hike in the SEP with additional hikes coming down the pike. Now, I get it. People want to say, oh, everyone knows about the rate hikes and whatnot. Well, here's the thing. They're certainly taking that idea and moving way too far with it. People want to say, the bulls want to say, sentiment is so low, I'm going to be the savvy guy, I'm going to buy when everyone's down, and I'm going to show them. I'm going to show them. Hold your horses there, because right now the VIX is quite low. And the VIX is a gauge that gauges put buying. It doesn't look like a lot of people are buying puts right now. That's not what the data is telling us. There's not that many shorts. S&P 500 short interest isn't very high right now. I get it. There's a lot of cash on the sidelines, but get used to that. There's going to be a lot of cash on the sidelines, and it's not going to go back down for several years. Why? Because cash is king when yields go up. The whole, cash levels are high argument doesn't work when yields have changed. That's the whole point. That You strengthen the dollar. You make people want to hold cash, to save, increase interest rates. That's what this whole thing's about. As far as I'm aware, sentiment is not that high, or it's not that low. It's quite strong. As I said, the Q's up nearly 20%. The S&P 500 tracking for a 16% gain for the year. That's high. That's high. That's bullish sentiment. That's bullish activity. We're up over 1% on nothing today. Negative sentiment, my ass. My ass. It's been 3 months to start the year. The market's up a lot, okay? Not negative sentiment. There's been plenty of time for that to be washed out. So, I'm not buying that. I'm not buying that. And I'm telling you why I'm not buying that. I want to talk about one more thing. That's oil. We saw a big reversal today. France draining its SPR by 10 million barrels. Don't be afraid of these SPR releases. I get it. They did impact the price of oil. But in Q4 last year, Exxon had its most profitable quarter ever. I believe that's a statistic. You can double check and let me know if it's otherwise, but it's what I believe, despite the fall in oil prices. Here's the thing you need to know about the SPR releases. It's a beach ball dynamic. So we've got a tight picture. We have demand growing more than supply, and demand is supposed to grow for the next 10 plus years. So there's this, when we do the SPR, it's a temporary patch. We're taking the beach ball and pushing it underwater. But all that's going to do is, first of all, when you have lower prices, you stimulate demand. So consumption goes up. In theory, oil's a little less elastic than that, but it's not perfectly elastic. There is a level at which people consume more and a price at which demand is destroyed to some extent. But beach ball effect. So when you do the SPR release, you're just pushing the beach ball lower. And what happens when the SPR release ends? That's what happens, okay? So we're starting to see that. Very volatile past week or so. That's probably why they did it. They were afraid of what they've been seeing. They know what's coming. And the White House can't do another SPR release. They have to refill it. As I said today, they were going to refill it. They went to France. Hey, can you guys unload it? France is going through some tough times right now. So that's the situation. That's the situation. And that's today's video. I get it. If you're doing what I'm doing, today is a painful day. The last 2 days not as painful. But it's a day, okay? Day by day. We can't get in that mindset. I know, I get it. Believe me, I get it. I was not happy today. I'm not in a good mood. But we get that PCE later this week. We have 3 Fed speakers tomorrow. We'll see what happens. That's today's video. Until next time, peace out.